Good morning, everyone, and welcome to another edition of Bleeding Crypto's Bitcoin Update. I'm your host, Bleeding Crypto, and today is Thursday, March 9th. We're going to take a look at Bitcoin in just a moment. I just wanted to remind you guys, if you can please hit the like button, that would be a great support to the channel, as the algorithms, the more likes that it gets, the more it processes through the algorithms and the more exposure I get through YouTube, and I'm trying to grow my YouTube account. So any help on your end would be appreciated if you can hit that like button. So let's get started with Bitcoin. So we had the drop outside of the retracement zone that we were looking at for a continuation, for a bounce and continuation. So as I mentioned before, once we break out of here, this now becomes invalidated. So I didn't want to change anything on the chart until we had the next until I recorded the next show, so you can see what I'm doing. And this way, those people who are following along every few days to the video, this is a continuation video, so it leaves off where we left off on the last video. And the last video I did was on Monday, so 3 days ago, pretty much like I said I was going to do every 2 to 3 days. So let's go ahead and just erase that here. And what I am going to do is I'm going to erase this HyBlock liquidation area here as we tapped into it a few times. So I'm going to go ahead and erase that as well. And I am going to also increase the time frame. I'm going to go to the 12-hour time frame just to give us a little bit more cleaner price action on the chart. So I'm going to do this. I'm going to remove this fib for now, and I want to talk about what the next step is. So we also did break out of this diagonal trend line that we talked about. We had bounced off of this line, and we had plotted this line on our video before. So it's still I'm still gonna leave it there because it was an area of support. However, we did break out of it. We did a back test to confirm it. So this is a good way of validating these type of lines. When you break out of it and it comes back and back tests and it rejects, kind of gives you that validity to the line, showing that that was a pretty valid line, and it basically back tested that bear break. Now, we also had these two areas of support down below, and as you can see, we got very close to this line. These lines, they don't necessarily have to hit exactly to the dollar, usually within that vicinity, and I consider this a pretty much valid support line area for it to touch. Now we have another one down below, and the way I plotted that one out was basically looking for support and resistance area. So you can see here, this candle here was support, this candle here was resistance, support, resistance on the actual candle body, resistance on the actual candle body, and these came out of it. But generally, I try to find a medium line. These are subjective. You can raise these up here and still become valid, or lower it, but just for the sake of the video, I just go ahead and we'll leave it there for now. Now let's talk about downside. We invalidated the move, the bounce to the upside, and even though we have these liquidation datas up here, these liquidation pools that are still valid, we didn't go up there. And again, to reiterate what I had said before, this doesn't guarantee that we're going to go up. It just shows us, it gives us a visualization to where the liquidity pools for the market makers to tap and make a pretty significant amount of profit are available to them. Now, other ones have popped up since then, since our last video, and actually in the past 12 hours since we had this drop, we've had new data come in suggesting liquidity pockets to the downside, showing, not suggesting, better said, showing liquidation to the downside, which means that more people are starting to long, and the more they long, they're going to have a liquidation point to the downside as well. So I'm going to show you those briefly, and then we're going to talk about price action. So this was refreshed this morning. 12-hour chart shows liquidations to the downside. These closest to the price action are the ones that have the higher X factor, higher leverage, better said. The ones that are down to the below, further down below, show a more cautious approach. So these guys are leveraging, but with not a high leverage amount. So they give themselves enough breathing room for a liquidation. So I don't know what the exact liquidation to this point is in relations to the opening price, but just by looking at an experience and looking at it, and experience tells me this is probably about a 5 to 10x. So you have a lot of breathing room versus these guys that are really close to the actual price action. Those are the full degen guys. Those are the guys that are doing 80, 100, 125x leverage. So that's why the liquidation areas heat are closer to that price action. Further away, less leverage they're using. So that's just a way to identify why those are so far away from the actual price action. So now let's look at the actual chart. Let's see what we have here. Let's see if we can come up with some confluence of, is this move over? Is there confluence still further down? Or can we bounce from here? One of the things I like to look at is harmonic patterns. So harmonic patterns are a very accurate way of measuring moves that tend to really, they seem to repeat themselves in the same fashion. So I will go ahead and I'm going to plot this out here. Okay, so this harmonic pattern shows that we could probably drop a little bit further down. However, this to me is still in that area of completion. Again, it could go a little bit lower. So let's just do this for the sake of just education. I'm going to make this white to coincide with the white lines of this here. So technically, the end of this harmonic pattern is right at the tip here. Now, if we look to the left, look at the way this wick literally finishes right at that area there. Doesn't necessarily have to happen like this. Anytime you're inside of an area here, that usually is pretty much good enough for me, as I don't need it to go to the exact dollar. Vicinity in that general area, giving me a reasonable percentage, a gap percentage is close enough. So we could call this the end, or we could still say we can see a little bit more. I don't think it really matters. You're talking about a couple $100 anyhow. And it's still too early to find out if this is the end or not. We can still see. Unfortunately, this is one of those things that if it bounces from here, then we can say, okay, that was pretty much the end of the pattern, and it can go either way. If it comes back down, I'll still be looking at these two lines, this prior support and resistance line, or the end of this harmonic line, which is the white line, which is the end of marking the end of that harmonic pattern. So we're still kind of in an indecisive. We don't know quite yet if this move is over, if it has a little bit more to go, or we're going to bounce. But typically, when I look at this harmonic pattern, I don't normally see a continuation of that break. This usually gives me that bounce effect. I'm expecting a bounce. Now, am I expecting a bounce now to reverse to much higher a price or back down to 25,000? No. Here's why. We're looking at a high time frame. High time frames, the higher they go, the more, what's the word I'm looking for? I guess the stronger the moves are. So the more we move down, the less chance of going higher becomes. Moving to the upside is a very normal process of a downtrend. Just like when we have an uptrend, we don't just have one straight candle. We have a nice thrust to the upside. We've got some retracements, 382, 0.50, continuation, and it continues to go up. Same fashion in reverse. Some people refer to it, and I do as well sometimes, a stair step. So you see that stair step market structure, and then you have the stair step to the upside, stair step to the downside. I know a lot of people, you see that phrase, stair step up, elevator down. Unfortunately, that does happen sometimes. But without a major catalyst, if we're talking about just regular price action, this is typically what we see. Now, at the end of this harmonic pattern, like I mentioned, we do normally see some sort of either consolidation or a bounce to the upside. So if we do have a bounce to the upside, what I'm going to be looking at is I'm going to go back to my fibs. So because I don't know if we're going to be coming down to here, I have to use what is on the chart, what the chart is giving me. So I'm going to use the points that are on the candles that are actually on the chart as my levels for the swing low up to the swing high, up to basically the prior lower high. Prior lower high is if we take the using the fib that I like to use for my lower high rule, which is normally 618, 706, 786, we may see a bounce as far up as 23.5. Now, going back to what I was mentioning about patterns repeating themselves, like this harmatic, this is a pattern that you got the high, the swing high to the swing low, you clone that, and that pattern usually works out the same way. You take the new swing high to the new swing low, and it generally ends in that vicinity. So the first thing I'm going to do, actually I should have done, is take the prior swing low to the prior swing high. And as you can see, we didn't quite make it to establish a lower high, but we did stop in here. So what I want to do now is I want to see if, since we didn't get respected on the Fibonacci, the 0.618, did we at least go up 50%? Right on the money. So we went up 50% here. So even though my lower high rule is 0.618, because we did a 0.50, I'm now going to use that as a confluence point. So I'm going to come down here and I'm going to make the prior lower high. And this is what I'm going to be expecting now as a retracement area for a continuation to the downside. I'm not looking at this for a continuation to the upside or breaking this, because now we're establishing a high, low, lower high, lower low, lower high, lower low. So that type of pattern is what I'm looking at now, unless it's proven otherwise, unless we invalidate it. If we blow through this previous lower high, then obviously we've invalidated this downward structure that we're starting to build here, and we're now looking for higher structure. That could happen, guys. We don't know which direction it's going to go. Like I've mentioned many times before, all we can do is try to measure these moves, look at areas of confluence, and try to come up with a case to the upside and a case to the downside. So for right now, because we've completed the harmonic pattern, naturally I'm looking for a move to the upside. So let's look for confluence now. We're going to look for a repeating pattern of this here. So this lower high here is what I'm looking at, the 0.50. Do I find confluence? Well, it actually lines up very well with the high block liquidation data, a point that is still valid. And if you look to the left, look at what it lines up to, guys. Prior support, very strong prior support. So that's confluence number 2. Now, as you guys know, I like to trade off of EMAs as well. EMAs is another indicator that I like to use that shows me confluence with support and resistance. So I'm going to go ahead and turn that on as well. Now, I had those hidden just to lessen the action on the price, so it isn't so intimidating. And I do use quite a bit. These make sense to me. If you're not an EMA trader and you don't use them, they might not make sense to you. However, I'm not going to be explaining these. This is not what the show is about. This show is more of an update. But as you can see, there is confluence with high block liquidation, 0.50 for a lower high, similar to the lower high we got here, and a very strong two very strong EMAs, 30 and 50. The 30 has already come a little bit below that area. Doesn't mean it still can't serve as a resistance point, but the 50 EMA is also a very strong EMA. So we have a tough area here with these two EMAs being so close together, the 0.50 to mimic this lower high and the high block liquidation point. So that's 3 points that I'm looking at for confluence. If we're going to go up, I don't see us going past this. Not that it can't, but this is what I'd be looking at for a new lower high. And then we will talk about downside targets if and when this happens. So that is my projection for the upside. Now let's look for projections to the downside. What if this doesn't hold and we do break out of this, which we normally, like I mentioned before, harmonic patterns are normally the end of that move, and before we see a little bit of upside, before we see more downside. So let's now make a case to the downside. What am I looking at for the downside? I'm going to remove this fib for now. Actually, no, I'm going to leave it on there because this will be interesting. If we do break to the upside, I want, because this is a continuation video, I'm using the same chart that I'm using on every update. I would like to leave that on there so that we have a nice follow through. So let's do this. Let's put some notes just for those who are interested in learning and are following these updates. Let's put some notes here so that when we come back in a few days, we know why we left this there. Looking for, I'm just gonna abbreviate it, lower high if we bounce. I'm gonna put if we bounce because we don't know if we're gonna bounce. We're actually, like I said, we're making a case for the upside and for the downside. So this is where I'll be looking at for confluence. If we bounce to the upside, now if we don't bounce to the upside and we continue down, let me start off by saying this: a continuation to the downside to me is unlikely unless it's catalyst driven. What I mean by that is some announcement of some event driven. So something happens in the market that is outside of the normal parameters, normal market structure, normal market behavior, like some sort of liquidation event. Somebody goes under, they have to liquidate some assets, a major fund or hedge fund goes under and they're liquidating their Bitcoin holdings, some broader markets, some sort of news in the broader markets that create enough pressure to the downside that's going to affect crypto as well. Outside of that normal market structure, I don't see it falling any really past the 300 EMA. The 300 EMA is a very strong EMA of support and resistance along with the 200 EMA, and they're very close together. One of the things I do like to look at, and I've mentioned this many times before, is backtesting. When we broke through the 200 EMA here, this red line, look at the way we hit resistance. We broke above it, we back tested it here, and we kept on going. But look at the 300 EMA. If you look at the 300 EMA, this was a parabolic move right through the 300 with no back testing. Let's follow the 300 EMA. Have we ever back tested it since we broke off of here? No, we have not. And we're really close to it. So this adds to the possibility that this harmonic may actually find full completion and even a wick below it before finding, I think, a good area to find some sort of consolidation before we see a bounce to this lower high. To the downside, if we have some catalyst, we have an area to the downside that I believe will, we've been talking about, we've had this in our chart. So we have two areas in our chart. We have this $21,300 area. It's not going to be to the exact dollar. It's a general vicinity. We could actually draw a box and kind of encompass this whole area, but I'm trying to minimize. Actually, I'm going to even do this. I'm going to erase. I'm going to hide, not erase. I'm going to hide the indicators again to not make it so confusing. When you're not used to using EMAs, the less that I show you on the chart, I think the more you're going to understand as it becomes very intimidating. I understand it because I remember being in your shoes. If you're new and you're trying to learn TA, the more stuff people leave on the chart, it becomes harder for you to understand and follow as there's a lot of distractions. So I'm going to hide it for now because now we're looking for just support to the downside if we break below the 300 EMA. So let's look at some areas of interest for support. This cluster here, like I said, we could actually do something like this. That'd be very valid for an area of support because there was a lot of interest in here. A lot of interest inside of here. So anywhere inside of here would be our last line in the sand, I would say, before coming here. There was no real structure built in here. There's no real support and resistance built in this area here. So this increases the chance that if we break outside of this support area, we come straight down. One of the things I want to look at is before this parabolic move, was there any type of structure, support structure build that will lend itself for this move here? Because support and resistance, guys, doesn't go away. It only strengthens in time. So the more you find support and resistance on a certain area, as the time goes by and that area gets revisited again in the later future and it finds support and resistance again, it only strengthens it. There's no expiration date. So I'm going to just go to the left real quick here, and I'm going to see, was there anything built in between here? And there actually was. There actually was very good area here of that I haven't touched on this before, and I guess I should have, but we weren't trying to get ahead of ourselves. We were trying to stay within that local parameter for the update. And I know this update's getting a little bit longer than I wanted to, but again, there's nothing going on in the market, and if you don't want to continue to listen to it, you can exit out of it. But I just want to provide at least a little bit of insight, some education, and I have all the time in the world right now, so there's nothing that I'm pressed to do. So I just want to give you an insight of how I'm looking at things. So now that I'm looking at this here, look at this line here. Resistance, 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 support, 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 support. So there's a lot of areas that you could have moved this line around, and totally valid. I just picked this one here because when I pick a line, I try to look for areas where we've got really nice bounces, wick bounces, and also candle body and wick resistance. And for me, I just chose this one. And again, it doesn't have to be to the dollar, this vicinity. So now this tells me, now that I move over here, this tells me that, you know what, we may not drop completely down. We may find a nice area here of support. And the crazy part about this area too is that there is a CME gap within this vicinity. If I'm not mistaken, it's at 19.8 or 20,000 for those that follow the CME gaps. The CME gaps, you have to understand, those funds are not traded 24 hours like regular spot crypto. Those are, they follow the same schedule as broader markets. So they stop trading at a certain hour on a Friday, and they start trading again back on a Monday, creating those gaps. But the pattern of getting filled is something that I like to pay attention, because it does affect the spot market. Remember what I told you guys in the very beginning. These indicators, guys, are there to identify trends. I don't care what the trend is, to be honest with you. Some people follow astrology as a marker, and I have a good friend of mine, Astrodamus, that puts out information, and also Marin, I think is her name, another very well-known astrologer, and they have a different way of reading the markets apart from using TA. They will use the astrological events to mark certain areas of pivot points, and as you can see, it's just like using these indicators. They're not 100%. But they play out quite often, enough for them to discern a pattern and enough for them to trade off of and make money. It doesn't matter what you use, guys. You don't have to believe in it. As long as you find a pattern that will give you some confluence that works out more often than that, that's a pattern that I would like to use. So on the CME gaps, going back to what I was mentioning, those have had a very high success rate in getting filled and affecting spot markets. So I'm going to continue to utilize those until they're not as accurate in the market any longer. Then I can discount them. But for now, very accurate, it's a very good indicator for me to have in the forefront of my mind when I'm looking at certain areas here. I don't have them plotted out in my chart again. I'm trying to minimize that, but I know it's somewhere in this vicinity, so it lines up well with this support area. So we have one more area of support that I'll be looking at before coming down and testing this neckline, if we are going to go that route. I'm going to reiterate something that I've talked about for many, many months. My 0.886 area for final bottoming in that vicinity is 11,377. That's the exact fib 886. I told you guys that it will be invalidated. My invalidation point was, let me show you real quick here. I'm going to hide all. I'm going to hide everything here real quick. I just want to reiterate it, and I want to keep it on people's minds because, again, like I mentioned in the last video, people will tend to hear what they want to hear, and they don't want to listen to anything else. So if they're a bull, they don't want to listen to anything to the downside. And if it happens to the downside, even though I make a case to the downside, they get pissed off at you because you said there was a possibility of going up, and that is scriptural now. So I want to make sure that people understand there's always a case for the upside and for the downside. My 886, I told you it would be invalidated if we reversed the trend, which we failed to do so. As of now, doesn't mean that we can't hold here and start moving up and wake up tomorrow at $36,000. Complete possibility. Unlikely, but still possible. But as of right now, we did not break above $25,000, 25.3 area here, basically the last lower high. We did not break that. We did not find acceptance. We did not continue this higher high, higher low pattern. We actually broke down, and now we're basically teetering at the last area of support for this high time frame market structure. If you look here, you can see here we're pretty much at that very decisive, and we have a very ugly bearish market structure double top pattern. Double tops normally break down to a 786 area before finding. Well, there's two things that I see with double tops. They're either going to complete all the way down to the bottom side to where it started, which would be right here, or they go to 786. Those are the two generally what I see when I look at double tops. Double bottoms, however, are a little bit different. Double bottoms, which is the upside down of an M, tend to end at the beginning, at the top of the left side of the W. You see the way, look at the way this candle just ended, pretty much right here where this W began. This is what I normally see. This continued to go. So normally when we see a W like this, we see a W, then we see a flag pattern, and then we see a breakout. I play this pattern quite often in my Discord. W flag breakout. We have a little, we have a little meme about it, and it normally breaks out more often than not. However, this one was incredibly bullish. We didn't even pull back to get that W. We just continued to move, blast through. The market was incredibly bullish, and now we understand why this happened. A lot of those who've been following the on-chain data, knowing that the derivatives market was just using this as a liquidation, we can now understand why we broke and we didn't do a normal market structure. But aside from that, we normally do see W flag breakout. Now to the downside, it doesn't always work out the same way in reverse. It normally, like I said, goes to the 786 area, puts a flag, then continues to the downside. But nevertheless, this is a bearish market structure thus far, and we have to treat it that way. We had a tweezer top, and we had follow through. So far, this reversal pattern is not showing any signs of weakness. It's only building. It's only getting every week that passes by, and we continue to break down lower. We're only strengthening up that resolve of the double top pattern until it's proven otherwise. So for the downside, let's go back to the 4-hour time frame. Reset this here. Let's turn back our indicators. Not very far, guys. For the downside, I'm just looking at this area here as of right now. I'm going to remove this shaded area for now. I don't want to, like I mentioned before, I don't want to crowd the chart too much. So we're still within that bottoming range here. Could go a little bit lower, or it could bounce from here. If we bounce, I'm looking for the same pattern that we repeated here. Today is Thursday. Tomorrow we have some news. I think it's unemployment, but I'm not 100% sure. That is a big. It could be a very big catalyst for a move on broader markets that could affect crypto. And we're also going into the weekend. So I don't imagine after tomorrow's news and how that plays out, Saturday and Sunday, I can't imagine there's going to be too much action. So what I'm trying to get to is my next update will probably most likely be on Monday. Unless something major happens, I will update you guys on Monday. We will look back at this chart exactly the way I leave it here, and we will see. Did we complete, first of all, the harmonic pattern? Is this the completion, or did we actually come down to the full completion here of this exact line, which again doesn't normally happen, but it could? And if so, if we bounce, did we bounce here? Did we respect the same type of rule set that we respected here and mimic that same pattern? We will find out on Monday. We will look and see if that happened, or if there was a catalyst that brought us lower. But at least we have an idea of why and where things ended where things ended, better said, and why we were expecting it, so we can have an idea of, again, to start coming with a good view of the market and understanding how market structure works, how price action works. This helps people develop, become traders, better said. It helps them to develop their trading skills as they start understanding the language of the market. Many people come into the market and think it's just going to go straight up and come straight down. Then they start really paying attention to the charts and understand that that's not how it works. Yeah, the trend could be up, but within that trend, there's areas of resistance, retracements, continuations. And when you start understanding those patterns and how those patterns work and what causes, what metrics are used to measure those moves, and you start to finding out that, hey, those measured moves tend to really repeat themselves. Then you start formulating a plan. You start seeing the market differently. You start understanding the market differently. You're not so emotional every time you see a big candle to the downside or a big move to the upside. You start to understand why we're moving there, what's causing that move to the upside or to the downside, and you start zeroing in on how market structure is formed so that you play it with a more level-headed, and you remove that emotion of those swift moves that sometimes the market gives us. But you have a better understanding and expectation of why we were expecting that area, and it fell into our area a little faster than we anticipated, but we're not getting overly bearish. This is normal. More likely we're gonna bounce off of this trend line, and look, we did that. We consolidated, we broke down, we back tested it. All that becomes just very normal, kind of boring, but I'd rather it be boring than be something that creates a lot of emotional, it creates a lot of emotion, better said, because that emotion does tend to cloud the view of the market, and it really hinders your ability to progress as a trader, as those emotions tend to get away from us. So the more we can move away from our emotions and understand how price action and market structure works, I think the better trader you become as you understand the markets a little bit better. All right, guys, I'm going to end the rambling now. I just wanted to touch a little bit, and since we have the time, I wanted just to give you a little bit of extra. If you guys want to join my free Discord, send me a DM. Tell me you want to join, and I can give you access to my I tell you how to get access to my free Telegram group. If you want to improve your education, you want to understand how to read these markets, how to use the fib, how to use the EMAs, how to use the MACD, RSI, and OBV to help you come up with bearish divergence, with bullish divergence. All that educational information is found on my Discord. It is a paying service, as I do put up my time, and I do expect to get paid for my time. I don't feel like you shouldn't have worth. There's some people that like to give their time away for free. That's up to them. I find value in myself, and I find that I'm not worth nothing. So I spent the time learning this. I'm going to spend the time teaching you. I feel like my time is worth something. It's not worthless. So everybody has a different view of it. Maybe it's my generational, maybe it's my age, but I don't believe in working for free. I never went to an employer and said, you know what? I'm going to do this job for free. You don't have to pay me. That's ridiculous that you're paying me. I've never said that to an employer. This generation seems to frown upon charging for anything. So I imagine they must live with their parents. They must live in, with somebody supporting them, where they're not going to they're not working for money. They're working for likes and for popularity instead of working for actual income. They must not need the money. So I need the money. I need to pay my bills, and I need to make a living, and it's only fair that I charge. So that's what my Discord is about. My Discord is about education, and I do charge a small fee, a monthly fee, month to month, no long contracts, and you can quit at any time, and you can try it out if you like to. All the links to all that is in the description of the video below if you're inclined to do so. Everyone have a really good day and have a great weekend, and we'll see you on Monday.